Have you ever wondered what Bitcoin and cryptocurrencies are? Let's take a step back in time to the year 2009 when the world was introduced to a revolutionary concept, Bitcoin. This digital currency was the brainchild of an enigma, an anonymous entity who went by the name Satoshi Nakamoto. The exact identity of Nakamoto remains unknown, but what we do know is this. Nakamoto saw a need for a new kind of currency, one that was decentralized and didn't require any central authority for transactions. And so, Bitcoin was born. But what does it mean for a currency to be decentralized? In simple terms, it means that Bitcoin doesn't rely on banks or governments to verify transactions or to control the supply of new coins. Instead, these tasks are democratized and spread out amongst the users of Bitcoin themselves. This is where the technology behind Bitcoin, known as blockchain, comes into play. Think of blockchain as a public ledger that contains all transaction data from anyone who uses Bitcoin. It's a bit like the checkbook register you might keep to track your personal bank account, but in this case, the register is maintained by a global network of computers, and anyone on the network can see the transactions. Each transaction made with Bitcoin is added to a block or a chunk of code in the blockchain. These blocks are linked together in a chain, hence the name blockchain. Each block contains a record of multiple transactions, and once a block is filled, a new one is created and linked to the previous block, forming a chain of blocks containing a history of all transactions. The inception of Bitcoin sparked a revolution in the financial world, paving the way for the emergence of numerous other digital currencies. And while Bitcoin and cryptocurrencies are still a mystery to some, they continue to gain traction and acceptance, shaping the future of how we might transact and interact with money. From Bitcoin's inception, the world of cryptocurrencies has grown exponentially. Like an expanding universe, new digital currencies have emerged, each bringing unique features and functions to the table. Let's take Ethereum, for example. Launched in 2015, Ethereum introduced the concept of smart contracts, self-executing contracts with the terms of the agreement directly written into code. This innovation has opened up a world of possibilities, from decentralized finance to non-fungible tokens, or NFTs. Then there's Litecoin, often referred to as the silver to Bitcoin's gold. It was designed to be faster and more efficient than Bitcoin, offering quicker transaction confirmation times and a different hashing algorithm. And we can't forget Ripple. This cryptocurrency doesn't just want to be another digital coin. It aims to revolutionize cross-border transactions with its payment protocol, RippleNet. As these cryptocurrencies bloomed, they began to gain acceptance in the mainstream financial world. Businesses started accepting digital currencies as a form of payment. Investors saw them as new asset classes, and consumers began to embrace the convenience and freedom they offer. But it's not been a smooth ride. Cryptocurrencies are notoriously volatile. Their value can skyrocket one minute and plummet the next. But despite these wild swings, they've managed to carve a niche in the financial landscape. Their influence continues to grow, shaping the way we think about money and transactions. Despite their volatility, cryptocurrencies have carved a niche in the financial landscape, and their influence continues to grow. The influence of Bitcoin and other cryptocurrencies extends beyond the financial sector. They're poised to revolutionize commerce, technology, and governance, weaving a new fabric of digital innovation. Of course, the road ahead isn't without its hurdles. Regulatory issues and security concerns pose significant challenges, yet these digital currencies hold immense potential for disruption and innovation. They present an exciting frontier in our ever-evolving digital world. Cryptocurrencies, led by Bitcoin, have not only reshaped our understanding of money, but also have the potential to redefine the future of global finance.